Good evening, friends. We are discussing today important changes in GST made Finance Bill 2024. In this Union Budget, which is presented by Honorable Finance Minister on 23rd July, yesterday, we are going to discuss number of important changes in GST law one by one, clause by clause. I will also share the background material, and through that background material, we are going to discuss what all effective changes are being made, which is worth noticing, and we must take a note of it. So without taking any time, let me start immediately. There are clause number 110 to clause number 153 of Finance Bill number 2, 2024. Talking about changes in GST law. So we are going to discuss all these clauses one by one, topic wise. So let me share my screen first, and then we will start. And we can see what all changes we are referring to. Hope this screen is visible to all my friends, that what all changes we are going to discuss today. So this is background material for all of you to look at the effective changes. And let me start with very first change. If you look at it, is coming under section 9, which is a levy taxable event in GST law. And now they are saying specifically that no GST going to be leviable on ENA, extra neutral alcohol, used for manufacturing of alcoholic liquor for human consumption. No GST leviable. And it is made as per the recommendation of 53rd GST Council meeting. The similar change you will find under IGST Act also, under UTGST Act also, and respective state SGST Act also. Having said that, now I'm going to next provision, which is talking about composition levy. And what is the change they have done? In composition levy, if there is any demand to be raised, then we know the section 73 and section 74 was there. 73 non-fraud case, 74 fraud case. But this year budget finance bill has introduced a new section 74A. And this 74A is providing common timeline for issuance of so-called notice and order for non-fraud and fraud cases. We will discuss at length. And now the 74A going to be applicable from financial year 24-25 onwards. So they have given the reference of 74A alongside 73 and 74. So in this given situation, we have to know that from financial year 24-25 onwards, they will have reference of 74A. In lot many section it will come. So you just take a note of it. Having said that, now come back to section and the new section which got inserted, section 11A. And it is what? To regularize any non-levy or short levy of taxes. We have seen in the past, and which you must be knowing, that there may be some trade dispute. In trade common parlance, there may be a case, let's say GST as per trade was 12% leviable, let's assume, but department insists it is 18% chargeable. So there's short levy. And there may be a case of non-levy because trade is assuming this is not chargeable, but as per department, it is chargeable. So it's a case of non-levy. And we have seen a lot many circular got issued in the past wherein dispute was there, but the GST Council has principally decided that they will not demand non-levy of taxes or short levy of taxes as its wage basis. But the circular which got issued in the past was not having any backing from the GST law. Now they are giving backing of the GST law, which is section 11A. And it is starting with non-obstante clause, notwithstanding anything contained in this act, overriding all the provision. So this is the backing given to those circular which is being issued on as is where is basis for not to levy tax or demanding any tax in case there is a short levy. Having said that, let's move further. Section 13, subsection 3, important one. And this we have to understand from a context. You must be knowing that circular number 211 dated 26 June 2024. And it is as per recommendation of 53rd GST Council meeting, right? What is that relevance which I want to draw from each one of you? Very in clear terms, I want to explain this transaction to all of you. Let's say you all are recipient. And I'm your supplier who is not registered in GST law. And my supply to you is under reverse charge method, either under section 9 subsection 3 or section 9 subsection 4. You as a recipient need to pay GST liability under reverse charge. Now the question which was there and which was considered by 53rd GST Council meeting and circular number 211 got issued, in that context, there is a change in finance bill in the section 13 subsection 3 of CGST Act. What is this? I will tell you. Just first listen what is being provided by way of circular. Let's say I have given some services to you, advocate services for easy understanding, on let's say 1st January 2020, pertaining to financial year 1920. You have not paid any amount to me. To the advocate, you have not paid any amount. But advocate services are under reverse charge method. Question would be, being a recipient, you are a business entity and having threshold more than 20 lakh rupees, you have to pay reverse charge liability. I raised my invoice on 1st January 2020, but as on date, when we are discussing on 24th of July 2024, you have not paid the reverse charge liability. There were certain questions. What were those questions? Whether reverse charge is really applicable, even if I have not paid the amount to the supplier, to the advocate first. If reverse charge applicable, what would be the time of supply, point of taxation? Second. Third, what would be eligible document for availing credit when you as a recipient need to pay reverse charge liability, which you have procured from unregistered supplier? Fourth, if I'm paying RCM today on 24 July 2024, can I avail credit? Fifth, if I'm paying RCM today, whether it is liable to interest, because it is pertaining to 1920, lot many questions. Now, what is being resolved? It is being resolved, yes. Being a recipient, you can pay the liability in current financial year. If you can pay the liability in current financial year, then sixth question which is coming to your mind, what happened to my credit? As per section 16, subsection 4, time limit to avail credit. I'm paying liability of 1920. In 24-25, can I avail credit? So these many questions are there. I'm resolving one by one. So you have to take a note of it. The first one, an important one. Whenever you procure from unregistered supplier, I'm using the term unregistered supplier. notified goods or services under section 9 subsection 3 or section 9 subsection 4. Then you are liable under reverse charge. You have to pay reverse charge liability. What is your time of supply? Time of supply point of taxation as per section 13 subsection 3 is earliest of date of payment, which you haven't done, or date following the end of 60 days from the date of invoice issued by the supplier, and supplier is not registered. He is not raising any invoice in GST regime. Then being recipient, you are required to raise self-invoice to yourself under section 31 subsection 3 clause F of CGST Act. And that invoice is going to be your eligible document as one of the conditions for availing credit under section 16 subsection 2 clause A. You can avail credit provided you make RCM payment, reverse charge liability payment, as per Rule 36 sub Rule 1 clause B. So what is eligible document? Your own self-generated invoice, which you're raising today, but otherwise you are required to raise in 1920. Then this 13 subsection 3 got amended. And now they are saying that the third condition would be clause C, and they're saying date of issue of invoice by the recipient. In case where invoice is to be issued by the recipient. So out of 3, whichever is earlier. So you have not made the payment. Supplier who is unregistered, his invoice has no relevance. Now they are saying being recipient, you are registered, you are raising invoice, you are raising on today's date, 24 July 2024. So that would be the POT or not. So here, one thing which you must keep a note of it, you were supposed to raise invoice in 1920 only, but you're raising now. So you're satisfying the condition of time limit to avail credit, because if today's date invoice 24/25, then you will look at time limit condition of 24/25 under section 16 subsection 4, but there the violation of invoice was not issued in time-bound manner as per section 31. So there would be penalty under section 122, and these all discussion which I'm doing with all of you is there in the circular number 211. So the penalty would be how much? They are not specifying anything in that circular. But now that penalty would be, as per me, under section 122 subsection 3 clause E, would be 50,000 rupees. So this penalty would be leviable because you have not issued the invoice in time-bound manner. So POT provision got amended. Correspondingly, circular is clarifying you can avail the credit under reverse charge method when you're procuring from unregistered supplier, and when invoice is not raised, then the penalty provision. Now question comes, interest is leviable because POT has arisen on the date you were supposed to, right? Whether interest is leviable, of course leviable. You were supposed to raise in 1920, which you're raising now. So POT to be considered from the date you're supposed to raise invoice when you have received the services. 1st January 2020. So POT has arisen, you are liable to pay interest under section 50 at the rate of 18% per annum. And for reverse charge, you have to pay in cash. You can't use your e-credit ledger. Interest, again to be paid in cash. You can't use your e-credit ledger, but credit is available as per that circular number 211. So this is the change under section 13 subsection 3. Time of supply need to be raised along with that circular 211 as per recommendation of 53rd GST Council meeting. Now, next important change under section 16 subsection 4. under section 16, subsection 4, you know what is the time limit to avail credit? Earliest of two. Due date of furnishing return under section 39, which is GSTR 3B, for the month of September following the end of relevant financial year. Or due date of furnishing annual return, whichever is earlier. Effective from 1st October 2022, you are aware of the due date of furnishing return under section 39 for the month of September following the end of relevant financial year got omitted, and it is made 30th November. Having this background, the first challenge, and for that we got 53rd GST Council meeting recommendation. What is that? That for initial period, lot meaning taxpayer could not have availed credit in the time-bound manner. They failed to avail credit in the time period specified. So for initial 4 financial years, 17-18, 18-19, 19-20, and 20-21, they are now amending the provision and inserting section 16, subsection 5. And subsection 5 is starting with the non-obstante clause, overriding subsection 4 and saying if we have availed credit in 3B for these 4 financial year up to 30th November 2021, you are entitled to avail credit. That is what the change is being made with the retrospective date. So for all the taxpayer who missed timeline but had taken the credit in 3B beyond the time period specified, but up to 30th November 2021, for initial 4 years, credit would be available. Here, one thing I would like to discuss. What happened if you have not availed in 3B? Maybe you can avail it. Maybe you have availed in 9 or 9C. There may be a case. Then there's no relief as per this provision. No relief. Maybe a subject matter of litigation or dispute. Maybe you have not availed in 9 and 9C. Or maybe a case 3B you have filed, but by mistake you have mentioned nil. It was your bona fide mistake. I'm not saying any mens rea, but you have not shown in 3B. Then of course, as per this provision, unless it is being shown in 3B and that too up to 30th November 2021, you will not get the credit. That is what it is coming out. Section 16, subsection 6 is a very important one. It is pertaining to the cancelled dealer. Let's take an example so that you can understand. In GST, let's say your registration got cancelled. Then quite obvious, after registration is being cancelled, you are not able to file your return, including 3B. When you're not in a position to file your return 3B, quite obvious, there may be a chance that time period which is given as per section 16, subsection 4 get expired. So what happened? After revocation, even if you will file, it is subject to time limit as per section 16, subsection 4. So there may be a case that time limit got expired. So now there is amendment in section 16 and new subsection 6 got inserted. And what they are saying very interestingly, in all such cases where registration got cancelled and it is revoked under section 30, or maybe by way of order by appellate authority, tribunal or court, then what they are saying, they're giving 2 propositions. Once your cancellation getting revoked, you should avail the credit either by 30th November of succeeding financial year or due date of furnishing annual return. This is the first option. Or second, and which is important for all of us together, they're saying you can file all your return, including 3B, within 30 days of revocation order for the period your cancellation to revocation, then credit would be available and it will not be barred by section 16 subsection 4. This is what, and then discussing this Roman 1 and Roman 2, they're saying whichever is later. So 30 days time period from the revocation order. You must file your return for the period cancellation till revocation. You will get the credit. This is section 16, subsection 4. I discuss all three components. Reverse charge, discuss the credit which you have availed in 3B but beyond the time limit, and for the cancelled dealer. It is all changes are being made as per recommendation of 53rd GST Council meeting. Having said that, let me move to the next provision. And what is that next provision? Section 17, subsection 5, Roman 1. You must be knowing that there are barring provision, that you are not entitled to avail credit when it is being paid under section 74, 129 and 130. 3 sections. But now they are amending the provision. They are saying that if you are paying any tax under section 74, that is up to 23-24. Why up to 23-24? For simple reason, because 74A, which I'm yet to discuss, is applicable from 24-25 onwards. So this provision got amended accordingly, and they have done away, omitted section 129 and section 130. Why 129, 130 got omitted? Because that is penalty, and penalty, otherwise no credit available. It's not a case of 73 or 74. Penalty, otherwise credit is not available. So this is what the correction under section 17, subsection 5. Having said that, come back to section 21. And section 21 is meant for recovery of credit distributed by ISD, and such credit is being distributed in excess. Then quite obvious, department proper officer can demand recovery of same under section 73, 74, and these 2 sections are now only up to 23-24. What about future? 74A. That reference is being drawn 74A from 24-25 onwards. Coming back to revocation of cancellation of registration. This is enabling now to the proper officer that they are giving enabling provision how the revocation can be made. Certain subject to such manner may be prescribed, certain restriction may be prescribed. This is what it is being referred to. Come back to section 31, tax invoice. You must be recalling my discussion of reverse charge. That self-invoice under section 31, subsection 3, clause F. That is what amendment they have done. And to understand this background material, what is beauty of this document is, wherever it is black, it means before and after provision are same, no change. And wherever change is being made, it is being made in green. So that you can identify, easy for you to understand. So within the period as may be prescribed. So quite obvious, if it is service invoice, it must be raised either before or after within 30 days. That is the prescribed provision. And that is how I was referring while discussing section 13, subsection 3. So within that time, we should have raised the invoice. That is what I'm referring to. And this is what the change they are making here. And one more change through explanation, they are saying non-registered supplier will include some, taxable person who are registered as a TDS deductor. They will be considered as a unregistered supplier. That's the explanation. Come back to section 35, accounts and records. We know compulsorily we have to keep accounts and records. If we are not keeping certain accounts and records, then there are penalty provision. And penalty can be, these proceedings can be initiated under section 73 or 74 up to 23, 24, and they have instructed 74A for financial year 24, 25 onwards. That's what the change they have done. Coming to the section 39, furnishing of return, and it is applicable for TDS deductor. They are saying if you're a TDS deductor under section 51, you need to file compulsorily your GSTR 7, irrespective of fact, whether in that particular month you have deducted any TDS or not. So even if it is nil return, you have to file your GSTR 7. That is what this change is talking about. Coming back to section 49, and I'm discussing clause by clause so that you get a clarity what all changes are being made in Finance Bill 2024. Section 49 is being referred to payment of tax, interest, penalty. And there was reference of section 73 or 74. Quite obvious, they need to include 74A, and that is what they have included in this particular section. Coming back to section 50, which is interesting to know. Section 50 is interest on delayed payment of tax, right? And interest is leviable on net tax liability. You must be knowing that. Let's say your liability is 1 lakh and you're having 80,000 rupees in your e-credit ledger. You need to make payment only 20,000 from e-cash ledger. That is called net tax liability. And this interest to be levied only on net tax liability. But there was exclusion in that proviso. If any proceedings has been initiated under section 73 or 74, then you will not get that benefit. So now they are adding section 74A. Quite obvious, 73, 74, only up to 23, 24 financial year. 74A going to be applicable from 24, 25. Quite obvious, if any proceedings got initiated under section 74A, then interest to be paid on gross tax liability. This is what the meaning of this particular change. Coming back to section 51, tax deducted at source. There may be a case that there is certain demand need to be raised against tax deductor. Then of course 73, 74 is the important section for issuance of notice and order. Now 74A reference got inserted. Coming back to section 54, refund of tax. So in section 54, there are two things which we must take a note of it. Two things. You must be recalling 53rd GST Council meeting recommendation. And they have categorically said, if you are supplying zero-rated supply and supply of goods which is subject to export duty, there was barring provision that you will not get refund of ITC. And correspondingly, they have made the changes under section 16, subsection 5 of IGST Act, even though IGST route cannot be adopted. So in simple one-liner, neither you will get IGST nor you will get refund of ITC whenever you are doing zero-rated supply of goods subject to export duty. This is what this change talks about. Having said that, now section 61, scrutiny of return. And this scrutiny of return, a lot of things is before us. That whenever any discrepancy noticed by a proper officer, he issue ASMT 10, right? We need to reply back in ASMT 11 within 30 days. If your reply is not satisfactory, then he is going to issue ASMT 12 and initiate the proceedings under section 65, audit by the department, 66, audit by chartered accountant or cost accountant nominated by the department, 67, which is inspection, search and seizure, 73, 74, so-called notice and order, non-fraud and fraud case. Now they have included the reference of 74A because from financial year 24-25 onwards, 74A going to be the relevant one. This is what change under section 61. If you go to the base judgment order, section 62, time when you are not filing your return under section 39 or final return under section 45, department can pass base judgment order within 5 years from the due date of furnishing annual return, right? And this provision start with a non-obstante clause. What is the non-obstante clause? The base judgment order can be passed irrespective of, notwithstanding anything contained in section 73 or 74, but from 24-25, 74A going to be relevant. That is what they have included in section 62. Coming back to section 63, assessment of unregistered person. Again, it starts with a non-obstante clause. Notwithstanding anything contained in section 73 or 74, now further amended to 74A for passing the order assessment done under section 63 for unregistered person. Similarly, you will look at section 64, summary assessment in certain cases. There also, they are including the reference of section 74A alongside 73 or 74. Having said that, now audit, section 65, audit by the department. So you know that once audit being done by the department, they are going to issue the audit memo. You need to either accept and pay the liability. In case you don't accept, they can initiate the proceedings under section 73 or 74. Now they have given reference of 74A, quite obvious, for the financial year 24-25 and onwards. This is what the meaning coming out. Special audit by nominated chartered accountant or cost accountant. So any proceedings which is being done as per the audit report, reference was given 73 or 74. Now they have added 74A. So I'm explaining each of the clauses one by one, and this background material would be available to all paid participants. Those who are paid participants with A2Z Tax Corp LLP, they will get this document for their EG run through. So this video with the background material you can access later and check all relevancy of the provision which I'm referring to. Coming back to section 70, very interesting one. A new subsection got inserted, subsection 1A under section 70, that we all the time present to the board CBIC, that why all the time you are pushing that a summoned person need to present before the authority. Why not any authorized person can present on my behalf? We have done, we wanted. This is what it be introduced under section 70, subsection 1A. Now you can authorize any person on your behalf to present before the summoning authority. But he need to disclose all material facts in true and fair. That is what the condition they have put under section 70, subsection 1A. Having said that, there's some little change under marginal heading under section 73. Why marginal heading change? Because they're saying 73 is now going to lose its relevance after 24-25 onwards. So it is only applicable up to 23-24. That is what they have added, period pertaining to, and that is up to 23-24. 73 is a non-fraud one. Then 74, and again they are restricting marginal heading up to 23-24. So this is 73, 74, but now the important one which we need to understand and which is very, very important for all of us together. They are inserting a new section, 74A. for issuance of so-called notice or order for non-payment of tax, short payment of tax, erroneous refund, ITC wrongly availed or utilized. 5 count. Under section 74A, now they are saying Bimal, there would be common timeline for issuance of so-called notice, and that is going to be 42 months, whether fraud or non-fraud. From the due date of furnishing annual return, and in case of erroneous refund, it would be 42 months from the date of erroneous refund. So this is the time period for issuance of so-called notice. They're again further saying, Bimal, for subsequent time period, if we have to issue a so-called notice, then we can issue a statement, and statement would be deemed as a so-called notice. So it need not be detailed. It may be in a form of statement. And whatever ground is being taken in the initial so-called notice would be perimeteria for the statement issued for the subsequent time period. And very interestingly, there's a merger of provision 73, 74 into 74A, which you need to listen very carefully. We have understood that so-called notice need to be issued in 42 months from the due date of furnishing annual return, right? When order to be passed, it is 12 months from the date of issuance of so-called notice, which can further be extended by 6 months on region to be recorded in writing. And this can be extended by commissioner or any proper officer not below the rank of joint commissioner. So time period given for issuance of order is 12 months. Further can be extended by 6 months. So this is a time period for so-called notice and order, irrespective of fact, fraud or non-fraud. Now you would be thinking, what would be penalty provision? We have seen different penalty treatment under section 73 and 74. What they are saying, if it is non-fraud case, then penalty going to be higher of 20,000 C plus S or 10% of tax amount, higher of 2 in non-fraud cases. What would be penalty in fraud cases? 100% of tax amount. But now what they are giving relaxation, listen that one carefully. If it is non-fraud case and you're paying the tax interest before issuance of so-called notice, then no penalty. And even so-called notice need not be issued by the proper officer. It is before issuance of so-called notice. If so-called notice got issued, then what happened? Then also they are saying that you can pay tax plus interest and penalty need not be required, but within 60 days. It was earlier 30 days. Now it is 60 days. Within 30 days of issuance of so-called notice, then no penalty. And all proceedings deemed as concluded for non-fraud cases. What about fraud cases? Before issuance of so-called notice, tax, interest, and 15% penalty. If so-called notice is being issued and you are paying within 60 days of so-called notice, because earlier it was 30 days, now it is 60 days. Tax, interest, and 25% penalty. If order is being passed, Then again, within 60 days of the order passed, if you are paying tax, interest, then 50% penalty for fraud cases I'm referring to. 60 days from the order passed, 50% penalty. If you miss this deadline, then 100% penalty. So you have to keep these provision in your mind. Another provision which you must be knowing, I do not know to what extent you have captured, it was there that any self-assessment tax or tax you have collected, you must pay within 30 days from the due date of payment of tax. You must pay. If you don't pay, then penalty by default going to be leviable as per the provision of non-fraud or fraud case. So you have to be very careful about with this provision, which I'm referring to. And 74A going to be applicable for financial year 24, 25 and onwards. And fraud need to be judged on the basis of when there is suppression, willful misstatement, fraud is there. That is what the fraud cases. The similar analogy they have kept it. But certain explanation is important. You must know this explanation also for clarity purpose. What is this explanation is saying? I'm just showing to you so that you will get a clarity that expression of all proceedings in respect of said notice under section 74A shall not include proceedings under section 132. Are you getting meaning of it? Proceedings which is covered by 74A has got nothing to do with the proceeding under section 132, and that is prosecution provision, bailable and non-bailable offense. We will take out this topic at different point of time for discussing in detail, but even though you are paying up the liability does not mean that you are being relieved from the prosecution provision. Wake up call. I'm telling you, wake up call for all of us together. Subsequently, Roman 2 is saying, Bimal, if proceedings against main noticee is being concluded, then we shall assume that it is concluded against the co-noticee under section 122 and section 125. And explanation 2 is defining what is the meaning of suppression. Simple meaning I'm giving it to you, which is given in the explanation. You are required to furnish details in the return, and you are not furnishing details in your return. Can be considered as a part of suppression. There may be many reasons either way that you're not furnishing details. That is the reason I repeatedly say and repeating again here, if you treat your transaction as exempted, you must make a mention of it in your return as exempted. That may be a subject matter of dispute interpretation, but not showing the amount can be considered as a suppression. I hope you got my meaning of section 74A, which is newly inserted section for common timeline for issuance of so-called notice and order for fraud and non-fraud cases. Having said that, I will touch base some of the provision of section 75, and this provision is again important. I will touch base the relevant provision for you, so that you get a more clarity. Section 75 subsection 1 is referring to that where any service of notice or order is being stayed by an order of a court or appellate tribunal, then period of such stay shall be excluded for determining the time period specified for passing the order under section 73, 74. Now they are giving reference of 74A. A. That shall be excluded. Now, subsection 2A, and subsection 2A is talking about, and which is very much interesting, that you might got so-called notice, and so-called notice is talking about there is a fraud case. Then penalty is different for such fraud case, right? Now, this provision is saying, Bimal, if that fraud case is turned out to be non-fraud case, then you are liable for the penalty as per non-fraud cases. This is what it is being referred here. So you got a so-called notice or order alleging as a fraud. Later on, it turned out to be non-fraud case. Then at least to the extent of non-fraud case, whatever penalty provision applicable, you need to bear it up. This is one. Rest, what they are talking about, adjudication proceedings, 75 subsection 10. Quite obvious, within the time bound for passing the order, for simple understanding, that they must pass the order as per 74A in 12 months from the date of issuance of invoice, so-called notice. And so-called notice must be issued within 42 months from the due date of furnishing annual return. 12 months may be extended by further 6 months for passing the order. This time is very sacrosanct. If department did not pass any order in the specified time period, there was time period specified for 73 also, 74 also, now for 74A also, and department did not pass the order within the time-bound manner, then it shall be deemed that proceedings are concluded. Means then thereafter they can't do anything. They can't do anything. This is what 7510. Coming back to 75 subsection 12. And it is again starting with the non-obstante clause. Let me give you the background of 75 subsection 12. Whenever there is difference between liability shown in GSTR 1, say 10 lakh, and shown in GSTR 3B, 5 lakh, then 5 lakh is the differential amount. And this differential amount is considered as a self-assessment tax. And this can be recovered even without issuance of so-called notice under section 73 or 74. Now they are giving reference of 74A, and recovery can be initiated under section 79. I've made many other videos. Rule 88C, you must be recalling on same. So I'm not discussing those part. I'm only discussing the relevant changes pertaining to the Union Budget 2024, but I'm giving a flavor that if I'm showing this provision, you might not be understanding. So I'm giving the background, preamble of this provision so that you take a note of it. Of course, for detail, many videos on our YouTube channel. You can go and watch, and rest assured, all are free, no charges. Section 75, subsection 3. They're saying if any penalty is being imposed under section 73 or 74, now including reference of 74A, then no penalty for same act or omission shall be imposed on same person under any provision, any other provision of the act. Sometimes we find a so-called notice, they are levying penalty under section 74 also, under section 122 also. Many sections are being invoked. So if penalty proceedings is being levied under section 74, which is now 74A, then no penalty for the same act on same person under any other provision of the act. This is what the meaning of this particular 75 subsection 13. Coming back to 104, advance ruling. Advance ruling, now here it is very much important for us to understand if any advance ruling is taken by fraud, then that ruling can be declared by an order as void ab initio. So you can't take any ruling by means of suppression, misstatement, or fraud. If it is catch hold by the department, then that would be void ab initio. And second, they are saying that the time period which is being, within the advance ruling order until the order is being passed to vacate that advance ruling should be excluded for the time period specified for passing the order under section 73, 74, 74A. Coming back to 107, appeal to appellate authority. First appellate authority. You are being issued a so-cause notice, order is being passed, you file appeal before first appellate authority. So filing appeal, there's a requirement of pre-deposit. So when you're filing appeal, there are two things you need to do. First, you pay up all your accepted liability, tax, interest, penalty, fees, fine. You pay all admitted liability. Pertaining to disputed tax only, it was 10%, subject to maximum of 50 crore, 25 CGST, 25 SGST. Now this 50 crore got reduced to 40 crore, 20 CGST and 20 SGST. The first change, reduction in pre-deposit, again as per recommendation of 53rd GST Council meeting. Now subsequent change which they have done, that any appellate authority can definitely modify or can annul the order and pass his order, but no remand back is permissible. This is what we must take a note of it. And subsequently in 107, what is important one, and which I'm referring to, order enhancing fees or penalty for any confiscation of goods or reducing refund or ITC. So appellate authority is levying certain penalty for confiscation of goods or reducing your ITC, input tax credit or refund. He can't do so unless he issue a so-called notice and pass regent order. And that is what it is being referred. But while passing the order, he must kept in mind the time period specified under section 73, 74 or 74A. Coming to 109. 109, it is like, what all cases can be heard by principal bench of GST Appellate Tribunal. So there's a provision, specific provision that President of GST 80 can decide. So now they're giving a reference that anti-profiteering cases may be heard by principal bench of GST 80 post 1st April 2025. And this 1st April 2025, I'm referring from the 53rd GST Council meeting recommendation. Okay, come to the section 112. So I'm not reading the provision, but this is the background material and the crux which I'm sharing with my all viewers. Section 112, appeal to the tribunal. And tribunal is yet to be formed, GST 80. And we were having inherent fear that President got appointed on 6th May 2024. So within 3 months, we have to file appeal, but GST 80 is not yet formed. 53rd GST Council meeting recommended, okay, wait. We are going to give you a date. And from that date, you will calculate 3 months. Corresponding change is being made in the law. So you need not require to worry about a date going to be notified. And from that date, 3 months need to be calculated. Now, having said that, what about pre-deposit when you're filing appeal before GST 80? It is again reduced. The present provision is you must pay up your admitted liability, tax, interest, penalty, whatever, and then 20% of disputed tax, which is now reduced to 10% of disputed tax. Earlier, it was subject to maximum of 100 crore. 50 CGST, 50 SGST. Now it is reduced to 40 crore, 20 CGST and 20 SGST. This is what the reduction in pre-deposit amount when we talk about GST 80. Now, another one more change. I do not know whether you have noticed or not, but with the backdoor entry, never referred anywhere, that Revenue Department need to file appeal before GST 80 within 6 months, right? But they are being given extension of 3 months also. So 6 months, we are 3 months, they are 6 months, but further 3 months extension to them. So I can't say much about it. I can only say why this biasness. Let's have both sides, equity, both of us together. Okay, coming to 122(1)(b). This is the penalty provision on e-commerce operator, effective from 1st October 23. Now they are saying that this penalty provision is applicable only such e-commerce operator who are liable for TCS. They are liable to collect TCS under Section 52. And why this provision? Because you know that e-commerce operator are being allowed. Now, any unregistered supplier or composition dealer can supply through e-commerce operator. Now, if e-commerce operator is not complying with the provision, then quite obvious who would be accountable, because unregistered supplier is nowhere available. Composition dealer is a small dealer perceived. So all penalty, all compliances is on e-commerce operator, but only to such e-commerce operator who are liable to collect TCS. And this provision is made applicable from 1st October 2023. So this is 122(1)(b). Coming back to Section 127. They are saying if proper officer is of the view that person is liable to penalty, but same is not being covered under the provision specified: 62, base judgment; 63, unregistered person; 64, summary assessment; 73, earlier so cause notice; 74, earlier one; 74A got inserted. And then they are talking about 129 and 130. So hope this provision 74A inclusion is there. Now this is again much awaited and most awaited. Section 128A. What is Section 128A? You know, 53rd GST Council meeting has recommended that no interest, no penalty. If so cause notice is being issued to you under Section 73, non-fraud cases for 3 financial years: 17-18, 18-19, and 19-20. Provided you pay the demand as per 53rd GST Council meeting, it was 31st March 2025. Now, what is this Section 128A is referring to? Of course, it is giving benefit to you for 3 financial year. For non-fraud case, Section 73, but now what they are covering, and this you must take a note of it. If notice is being issued under Section 73, but order is not passed, you are covered. If order is being passed under Section 73, but no order is being passed because you may have filed appeal before appellate authority under 107, this case is also covered. Even appellate authority has passed the order and that is pending order yet to be passed by the tribunal, this is also being covered. So there was apprehension whether this benefit is only available for the notices issued, or even this is available for the order passed and pending before appellate authority. Tribunal is not yet formed. So relevance was appellate authority. And there is a case you have not paid neither the tax, nor interest, nor penalty. only 10% of disputed tax you have paid for filing appeal before appellate authority, right? Can you avail the benefit? Yes, you can avail the benefit. And this is what the section 128 capital A is talking about. So this is great advantage to lot many, I will say, to certain extent, it's a discrimination against the compliant taxpayer. What happened if you have paid the interest and penalty and you have settled down the case? You have not filed appeal. Or will you get benefit? No. If you have paid interest penalty, gone. Jo de diya, whatever you have paid, nothing will come back to you. So what we are finding in GST, lot of amnesty only given to the non-compliant taxpayer at the cost of compliant taxpayer. I'm making my fair comment here. I'm not taking any side of anyone. There may be some compliant taxpayer who may have paid the interest and penalty also. Even non-fraud case, I'm referring to section 73. Now, non-compliant will get those who have filed appeal, they will get the advantage. See? So, with restricting myself not to explain my observation, but this is what it is coming out from section 128 capital A. Now, there may be a case that you got the order in your favor and department has filed appeal. Possible, na? That it was passed order in your favor and department has filed appeal before appellate authority or tribunal or high court, then what happened? Will you get benefit? Provision is saying, yes, you will get the benefit. You will get the benefit, I'm telling you, but only condition, you must pay the liability from the 3 months from the date of order is being passed. Pay up the liability in 3 months from the date of the order passed. And for the taxpayer, of course, 53rd GST Council meeting said 31st March 2025, but provision is saying from a date to be notified. This is what the distinction, 53rd versus amendment made by the section 128 capital A. Further, they are saying, let's say your appeal is pending before appellate authority and you want to take a relief. Of course, you take relief, but you need to then ensure, you have to write back, confirm that you will not continue with the appeal and you will give up your right to appeal. So if you want to avail this benefit of waiver of interest and penalty, it is subject to a condition that you will not further proceed with the appellate mechanism and will not file any appeal. So this is what the condition which is being prescribed here. And for refund and interest, I have said, if you have paid, gone. No benefit in your hand. This is what coming out from section 128 capital A. One more provision, again interesting one. Let me add here also. Sometime order is being passed under section 74, fraud case, which is not covered, right? Not covered. But they are saying for some region, it is being considered by proper officer. It is to be considered by proper officer because of direction by the tribunal or court that it is not a fraud case. It's a non-fraud case falling under section 75 subsection 2. Then if it is falling under non-fraud case, then you must get the relief, right? So they are covering this issue also. So be careful. These are the points which I have narrated to all of you. Maybe giving a clarity to you what is section 128 capital A and your preparation to avail the benefit. Of course, with a rider and comment, disclaimer from my side, compliant versus non-compliant taxpayer. We have seen in GST, non-compliant taxpayer are at advantage. So further, let's move further. Section 140 subsection 7 retrospectively amended. And what is this? That any ISD who is procuring input services prior to appointed date, July 1, 2017, then he will get the invoice also, right? So earlier provision was he's getting invoice on or after appointed date. Now they're saying they may get that such ISD may get invoice even prior to or on or after appointed date, July 1, 2017, and he's entitled for the credit, for the transition of credit in GST regime. And retrospectively, GST got introduced on July 1, 2017. We are talking about transitional credit. Why this change? You'd be thinking why this change has come. I got 2-3 clients, those who are struggling with for transition of credit pertaining to that only one, that provision only. And that is getting retrospectively amended 7 years of GST. So GST is really a nascent for all of us. A lot of things are really going and we are finding amendment done with a retrospective date. Okay. So this is what section 140 subsection 7. Section 171 subsection 2. Again, very interesting, anti-profiteering. There would be sunset clause. 53rd GST Council meeting has clearly said 1st April 2025. And any anti-profiteering cases now going to be heard by principal bench of GST 80. To that extent, there's a corresponding change in section 171. Having said that, now coming to 2 new entry got added in Schedule 3. And Schedule 3 is what? Neither a supply of goods nor supply of services. Para 9 got added, and Para 9 talks about apportionment of co-insurance premium by lead insurer to co-insurer. So apportionment. Why this entry got added? Very simple. If lead insurer has paid the full tax liability on the total premium, and that premium get apportioned, why then on apportionment again GST? So they're saying, yes, understandable. We got it. Para 9, neither the supply of goods nor supply of services. Good. At least we are understanding. Para 10 got added in Schedule 3 that reinsurance commission between services by insurer to reinsurer, neither the supply of goods nor supply of services. So this is what it is being explained. Now coming back to clause number 146, with respect to section 16 subsection 4, are you recalling time limit to avail credit? They have introduced subsection 5 also, subsection 6 also, but they have put one disclaimer that now we are giving this relief, but somewhat you have not waited and you may have reversed the credit because of time limit got expired. Or maybe you have paid the taxes, no relief. So again, compliant versus non-compliant. So we have to really understand, and that is how we have to understand these aspects in a well perspective. This is what I've explained to all of you. Okay, now coming back to IGST. Very quickly, because these provisions I've explained, so I will not take much time. Section 5, subsection 1, chargeable section. So chargeable section is saying that ENA would be out from the purview of GST. So as done in CGST, it is being done under IGST. Similarly, is being done under UTGST. All right. Power to grant exemption. Again, regularization of non-levy or short levy. Similar provision like 11A of CGST Act. That is what it is being prescribed. Section 16, subsection 4 got amended. And what this amended provision is saying, it is clearly saying that IGST refund mechanism is not available to the notified class of persons or notified goods or services. You must be knowing from 1st October 2023 that department is apprehending that there are certain class of person or certain class of goods or services, they should not be given IGST refund on zero rated supply. They can go for LUT, refund of ITC. So they are saying this provision going to be governed as per section 54 of CGST Act. And for brushing up your knowledge, who are being prescribed? Tobacco manufacturer, pan masala manufacturer, they are not entitled for the IGST. In case they are exporting, they have to follow the refund of ITC route. Section 16, subsection 5. They have said now, notwithstanding anything contained in subsection 3 or subsection 4, if zero-rated supply of goods subject to export duty, you can't follow. Neither you will get refund of ITC nor you will get IGST refund. So it will not be possible, neither way. So done, this is, and coming back to section 20, that pre-deposit for appeal, first appellate and second appellate. IGST would be total, right? So first appellate, it would be 10% subject to maximum of 40 crore as per new provision. Tribunal, it would be 10% subject to maximum of 40 crore. That is what the provision need to be read. UTGST, again, chargeable section, ENA taken out from the purview of GST. Section 8A, which is again regularization of non-levy and short levy as a general practice. Now there is provision change in cess, again regularization provision, that there is non-levy of cess or short levy of cess because of general practice. So government is being empowered. They can regularize by way of circular as its where its basis. So this is all from my side. Let me first stop my sharing screen and come back to the main screen. See, I've tried my best within a time of 1 hour 15 minutes, a complete holistic changes in union budget 2024. And we have discussed many provisions. So these provisions are really going to be helpful for understanding and digest. I given the pretext, context also. So this pretext and context is important for understanding the changes. And this webinar, exclusively we are doing, A2Z Tax Corp LLP team is doing only for the paid participants. So we thought of giving this unique facility. Of course, I'm through with my presentation. I will be open to take further questions, but before that, I want to stop my recording and my YouTube live. Allow me for 1 or 2 minutes, then we will continue with the open question answer session. Just allow me for 1 or 2 minutes. I am taking pause for 1 hour 15 minutes continuously with no water intake. Allow me a few minutes more.